for abandonment of a project or continuing the project. Abandonment means to stop the project, not to go further instead of continuing. Okay, it is better to discuss the problem through an example. Okay, and this topic is under the subject of capital budgeting. This is the problem which we will discuss and solve relating to decision for abandonment of project. Okay, a project requires an initial investment of rupees 20,000 and has an expected life of 5 years. The project generates annual cash flows and also a scrap value or resale value at the end of each year as given below. The 5 years 1, 2, 3, 4, 5, the cash flows are noted here, say 10,000, 8,000 in this way. Okay, up to 5 years, as the life of the project is 5 years. Okay, and the scrap value is noted here. Scrap value after 1 year, the scrap value or the resale value of the project is rupees 14,000. After second year or after 2 years, the resale value is 10,000. In this way, the resale values are noted here. What you have to do? You are required to determine the optimal year in which the project should be abandoned. That is the year in which the project should be abandoned. In other words, identify the year after which it is more advantageous to sell the project at its scrap value rather than continuing its operation. This is the problem which we have to solve, and also you have to understand the topic, that is the technique to take decision for abandonment of a project. Now see the calculation. For calculation, it is better we have to discuss through Excel sheet. This is the problem which I have already noted. Year wise cash inflows for the project is this. 5 years projects, length of the project is 5 years, 1, 2, 3, 4 and 5, and these are cash inflows and these are the scrap values. So first of all, we have to take decision, should we go ahead with the project or not, that is we should accept the project or not. For that purpose, we have to calculate the NPV for the project. NPV means net present value. If the NPV greater than 0, then we will accept the project. In this problem, the discount rate is given 10%, and this is the calculation. First year, second year, third year, up to fifth year, all the cash inflows are discounted. If you multiply, this is the discounting factor, and you can see the formula for discounting factor 1 by 1 plus R. R is 0.110%. After first year, that's why power is 1. In this way, you can check. After second year, the discount factor will be this. After third year, 3, fourth year, 4 and fifth year. In this way, the discount factors are calculated, and in Excel sheet it is very easy, just to copy it and to change the power only. Now what will be the present value, expected present value, that is the cash inflows multiplied by the discount factor, this into this, then you will get the present value. In this way, for the value of each year, the cash inflow is to be multiplied by the discount factor and the present value is noted here, and this is the total present value. How much it is? 24,184. If the project runs for 5 years, then the total present value will be this. This is the inflow of fund. And what is the outflow of fund? As the investment is rupees 20,000, that's why this is the outflow of fund, and we have to subtract it. This minus this, the net present value is 4,184. As this is positive, that is the surplus fund will be generated in this project. After running for 5 years, this project should be accepted. Okay. Now we are moving after 1 year. This is the entire data. Again we have noted, this is the entire data which we have noted. Okay. This is the entire data. Year wise cash inflows. This is the scrap values year wise. Now first we have to determine we should continue the project or not after 1 year. After 1 year, this is the year wise cash inflows and this is the scrap values. After 1 year, the cash inflow or scrap value will be 14,000. That means instead of running the project, if the project is sold in the market, then the value will be received is rupees 14,000. That means if the project is not closed, then what will happen? Then these are the cash inflows after these years. That means we can say that if we not sell the project in the market, then 14,000 rupees will be considered as the outflow of fund. Outflow of fund means this is the opportunity loss, and if you not stop the project after 1 year, then you will get the cash inflows, this 8,000, 6,000 in this way. That means after that, after 1 year, the cash inflows will be 8,000, 6,000, 4,000, 2,000. Okay, and the discount factor will be this. Then what is the present value? The same process you have to take. This multiplied by this is the present value, and this is the total present value, and less the cash outflow 14,000. Because why it is cash outflow? This is the opportunity loss. Instead of selling the project, if you run the project, that means you lost the opportunity of receiving 14,000. That means it's equivalent to outflow of fund. You can say this is the investment. This is the psychological investment or opportunity investment, 14,000. That's why less cash outflow 14,000, and the net present value, this minus this, is 2,603. As this NPV is positive, that's why we should continue the project. We should not abandon the project after 1 year. Okay. Now in the same way, we should check the next sheet we are taking. We should check the project should be continued or not after 2 years. After 2 years, the first year, this is second year. After 2 years, what is the resale value or scrap value of the project? 10,000. That means if you not sell the project in the market and run, then you will lose the opportunity of receiving rupees 10,000. That means you can say this is your investment. Investment means opportunity investment. You are not receiving this fund as you are running the project. So if you are investing this amount, then you will get the inflows 6,000, 4,000, 2,000. That is after 2 years. When this is the first year received, second year after second year, third year in this way. That I have shown the computation here. This is after first year 6,000, 4,000, 2,000, and the discount factor after 1 year. After 1 year is this and this and this, and this is the present value. As the total present value is 10,263, and the cash outflow is 10,000. The net present value is 263. As the net present value is positive, that's why we should continue the project. Means it is better to run the project instead of receiving the scrap value. Okay, I think it is clear. Scrap value or the resale value is considered as your investment. It is invested, means opportunity investment in the project by which you are receiving these cash flows. If you abandon the project or sold the project, then what will happen? You will not receive all these cash flows. After second year, that is not these cash flows, only 10,000. But we are checking here, instead of abandon the project, if you run the project, then it will be benefit for you or not. So in that case, these are the cash flows. After second year, you will consider this is the first year, second year, third year. That is written first year. After first year, that's why the discount factor is this. Because after second year, this is the investment to the project, opportunity investment. You are not receiving this fund, means you are investing it. This is the outflow fund, you can say, and all these are the inflow of the project. Okay, and these are the present value. The present value is 10,263, and the cash outflow is 10,000. 10,000 means the opportunity you are losing, and the net present value is positive. That's why you should not stop or abandon the project after 2 years. Now we will check, should we abandon the project after 3 years or not. In the next sheet we will show it. So till the NPV is positive, we should continue the project. If the NPV is negative means your cash inflows present value is less than what amount you will receive by selling the project. At that time, it is better option to stop the project. That I will show in the next sheet. So this is the situation. The project should be continued or not after 3 years. After 3, 1, 2, 3. After 3 years means this is the 3 years. If you sell the project in the market, the resale value or scrap value of the project is 6,000. If you not sell, then you will not receive this fund. That means you are losing, you will lose this opportunity, and against it what you will get? You will get these inflows after this year, 4,000 and 2,000. That's I have shown here, 4,000, and this is the first year. After third year, the cash flow will be this, and this is the fifth year cash flow, the second year, and this is the discount factor, and if we multiply this, then we will get the present value. The total present value is 5,289, but the cash outflow is 6,000. Why it is 6,000? Why it is considered 6,000? Because you are not receiving this fund or cash, as you have not abandoned or closed the project. That's why we consider as if this is the investment. If you lost or if you missed, always outflow means your loss. Similarly, you can think this is the scrap value. That means you are not selling the project. That means your investment to the project is this. If you invest this, then you will get the cash inflows for these 2 years. Immediate after that year, that is after third year, the receiving will be rupees 4,000, and after that year will be 2,000. Now you have to compare, this is the outflow of fund with the present value of this cash inflows that I have shown here, 4,000, 2,000. Why you have taken the discount factor 1 year? Because you are considering from this point. Now, after 1 year, you are receiving this amount, and after second year, you are receiving this amount. That's why this is a discount factor after 2 years. This is power is 2. You can check it. If you multiply this into this, then you will get the present value in this way, and the total present value will be this. And cash outflow in this case after 3 years, 6,000, as the net present value is negative. This minus this is negative. That's why you should not go ahead with the project. You should stop or abandon the project. It is advisable, it is better to sell the project and to receive the fund, that is cash, rupees 6,000. It is better, that we have shown here. If you run it, then you will the inflow, you will lose this cash amount, and your inflow or at the present value will be this, and that is negative. That's why you should not go for this option. As the NPV is negative, the project should be abandoned. So this is the point when you should abandon the project. That was our topic of discussion today. Okay. Now we will summarize the result here. We'll summarize the result. Initially, the NPV for the project is this, that is NPV greater than 0, and hence the project is acceptable for investment. And after 1 year, as the NPV for the project is this, again it is positive, that is NPV greater than 0, and hence the project should continue, not abandoned or not sell the project. After 2 years also, we have seen, you can check the value that I have already shown you in the Excel sheet. The value is just noted here. For after 2 years, the NPV is 263, that is NPV greater than 0, and hence the project should continue, not abandoned. After 3 years, as the NPV for the project is negative, that is NPV less than 0, and hence the project should, and the project should not continue. This will be should not continue, that is should abandon the project. Okay, you should just correct it, should not continue the project, and it should be abandoned. Okay, thank you. If you have any doubt, you please note in the comment box, and I will definitely reply at the earliest possible. Thank you once again.